Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by the lab today. Hope you're all doing well as the rally continues. We're going to talk about something today a little bit different, something called a breakaway gap. Unless you've been around for a while, you probably don't see these too much. And you do need to have a specific plan in order to navigate. We're going to talk a bit about that today, among other things like structured trades, integrating Bookmap order flow tools with auction market theory, using a volume profile as a chassis to overlay trades on. We're going to talk a little bit about the Trader Lab. What's that about? It's about building the business of trading, understanding that trading is a statistically based business, not a gambling business or a video game. Of course, you can certainly approach it that way. However, if you're interested in sustainability and having a potential career path, this is really what the Trader Lab is about, and you're all welcome to Trader Lab. The thing about Trader Lab, to understand, is it's a community of traders. It's not about any individual. It's a collective, leveraged experience, because it takes a community, or whether they say a village, in order to create something better. So the idea of Trader Lab is a contribution of traders. Our senior trader has over 50 years experience. I've got 45 years, both professionally and otherwise. And of course, the full range of traders, from newer developing traders on to, shall we say, old salts. So the idea is it's not one methodology or approach. It's really the leverage of collective methodologies and also the experience of those traders. And we've all walked in your shoes. So no matter what you do or where you've come from, we've probably done it, or somebody has. And that might help you, because some of the things you might be doing as a developing trader, others maybe have already done it, and maybe they don't do it any longer. And there might be good reasons for that. So when it comes to developing as a trader and the learning curve, you might find that and of course this is always varies by the individual, redirect your energies into something that might be more productive. And that's only because we've all pretty much walked in the same shoes at different times. Anyway, thank you so much for visiting the Trader Lab. Let's get the things rolling. And if you're interested in Trader Lab, there is a link in the bottom of YouTube. If you want to access it, there is no cost. Plus, you can take advantage of the structured trades. There are 60 PDFs, which I might show later if I have time. Also, a library of webinars, and of course, the Trader Lab community. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Could I please get a screen and audio check? Thank you, Marty. How are we doing in YouTube? Thank you. Okay, everybody. Well, let's get going. Now, please remember, this is not a trade calling room. If we do get to real time, we'll certainly discuss it. I'm going to take a look here. Statistics, as you know, in the Trader Lab, statistics are an important part of trading. However, there is something that supersedes it. It's called context. And many traders do not understand what context really is. So let's take a look here. This is a RTH daily chart. And this is, and you guys who follow the stream, you know I did a webinar, or streams. I've done 2 streams, well, many streams over the years, but this is the day, election day in the U.S. And in that stream, it's titled, "Can the Market Predict the Outcome of a Presidential Election?" And it did. And I made that statement here. And this was, this is 10:30 Central Time is when I start the stream. And of course, this is before the polls close and the rest of it. And it's not that I'm saying I'm right, I'm wrong, anything. It has nothing to do with that. It has to say is the purpose of this stream is to help traders understand how the market works, why it does what it does, and how you get in alignment. Not only that, what is it saying? The market takes what it knows, but it's really operating in the future. So it operates with the present inputs, but it also projects the future. So this is what it was saying about the election, that there would be a Republican or a Trump victory, if you will, in this contest. Then once it became the news, then we have a gap, and this is a huge gap. If you look at this, and now it's happy days are here again, and off we go. Now I have to bring you back to another topic, and it's very important you keep this in mind. What does a blow off top look like? It looks like this. Because we were talking about it since the summer, and that we need to be looking for it. And in a blow off top, there's a lot of volatility. Now, nobody can tell, so it's not about that. It's conditional behavior. So now the market is really bullish with this kind of a move. This is a huge gap. And don't forget, potentially at some point in life, we will potentially, and I have to always say potentially because who knows, come back and fill this gap. But besides that, what's going on right now? Well, the market broke out, new all-time highs, yesterday. The market opened in the gap, came down into this range, and this 5,900 is an important level, and so is this level, but we went to 5,900, and this is all in yesterday's stream. So if you want to review that, it's the post-election stream. And then this, and we close new all-time high. Now, we have no reference points up here. So what do we do now? So we open higher. Now, so this is called a breakaway gap. And if you're not familiar with this, you got homework to do, because this is not another day in the jungle. This is contextual. And always the possibility, and this is what in trading we have to deal with, that we could open higher, get profit taking, fill the gap, right? And then either continue on our merry way or just come back inside here. But this is very bullish. Now, I posted this morning before the RTH opened some scenarios, and I do this in the Trader Lab. One of the scenarios is you have no news here, except the market is already playing the game, if you will. You have the public news, the retail comes charging in, and those who are afraid of missing out come in today. And that's what creates the gap. Now, the question becomes, do the longs in this leg and the early buyers here, do they get flushed out in a rotation down to test this level, or do we not? And those who are urgent and afraid of missing out, which creates the breakaway, creates this acceleration. And that's the phase we're in. Now, we have a target up above around 97.75, maybe 6,000 up here, which I will go into later. And that's part of our statistics. Anyway, if you have questions, please post them. I'll do my best to get back to them. Welcome to the Trader Lab, by the way, if you are visiting in YouTube. And of course, if you're new in the Bookmap Discord Trader Lab community, welcome to the Trader Lab. We'll do everything we can to help you achieve your goals. But again, it's only about sharing structured trades, which is pretty darn important, that you can reverse engineer to create a statistical edge, being in a community, and accessing a library of webinars to help you learn a process and a way to think in trading. Now, these are the structured trades that I share. There's 60 PDFs. I'm not going to spend time, but you can see them. Explanations, circles, arrows. And I'm not a vendor. There's no cost for this. And you're all welcome to the Trader Lab. So let's move along. Okay. Any questions, please post them. This is the RTH Open. And I have to point some things out to you now. Yesterday's high, RTH Open, the gap. So there's yesterday's high. Here's the gap. This is yesterday's settlement, and this is yesterday's retail price. Retail price relates to the auction or volume profiles. And all it means, and this is a shopping experience. So let's just remove the mystique from trading. Oh, it's so complicated. It is not complicated. Now, you may disagree with that, but let's redefine what it is. It is random, and it is uncertain. That is absolutely what it is. But is it complicated? It doesn't have to be. but it is always changing and it is always random. So complexity, I think we use the word complexity to describe uncertainty, but it is not complex. It is simple. Now that might sound like a contradiction, but it's not. And that's what TraderLab is built on. We make it complicated to rationalize why we can't do it or it's very difficult. If we remove complexity and create simplicity in our process, so it's very much formulaic, then when our trades show up that have a statistical edge or a vetted, just like gaming, because this is a gaming business like casinos, same thing. So if we're like the casinos and we only play games that have an edge over time in an uncertain, random environment, same as the casinos, because they don't control, what happens as far as the cards coming out of the deck or how gamblers play the cards. If we only play games that have an edge, even though it's completely uncertain what the outcome of the next hand is or the next trade, over time, if we follow this plan with an edge and only interact when the edge shows up, over time, we'll extract the dollars from the gamblers. Is that logical? That's gaming, and guess what? It's trading. That's what the TraderLab is built on. And if you can build out a plan or a business, and we're going to basically overlay the trading business on top of a structured business that's proven, that's called gaming, then does that give us an opportunity to create longevity and potentially a career path? Welcome to TraderLab. So, open higher out of yesterday's range. Now, there's possibilities. We can come here, the ETH mid. We can come to the build a gap. We can go to the overnight volume point of control, which is the same as this, except it's for the ETH, so it's the most recent auction, and I open above this. So in my trade plan, of course, my trade plan says what's going on because I can't predict anything, so I have to wait for behavior. I open. Now, this is the first hour's low. This has a high probability, the ETH high, of getting taken out. And right here, it's what's happening. Because we can either come down here, or if we break away and I see buying, I have to be thinking longs only. So for me, no shorts. And I was prepared to take a short. I don't want you to think it's not in my game plan. But I also know one other little thing. It's bullish, new all-time high. What do retail traders tend to do? Miss the move. What do call it stock traders, different higher time frame traders tend to do? Rush in. What is the emotional state for traders that are not participating? It's FOMO, fear of missing out, and everybody is going to pile in. And don't forget what I mentioned about blow-off tops. These are the conditions that create them. Now, the problem, of course, with the blow-off top is where's the top? And we won't know that. But the volatility picks up, the ranges pick up, and the violence of the moves picks up. So let's go take a look here. RTH open. Now, I have to confirm something here. Hold on, 76. I've been having some trouble with VWAP. So can somebody confirm that the RTH VWAP, that this is accurate at this time at 8:33, 8:34? Let me look over here also. Can you guys take a look at that? I've just been kind of having a hard time here with some of these levels since the daylight savings time. Actually, I think I do see what the problem is. Okay, that is not accurate, guys. Okay. TraderLab, can you confirm this, please? Yeah, GA. Yeah. Trading counter trend. Yeah, I know. This is why trade plan is very important. We were even having a nice conversation in TraderLab. One of our traders was said he had a feeling, and I have a little issue with feelings. Not that what an individual. I mean, I get feelings too. A lot of it's based on experience. But there's another element to feelings. What triggers a feeling? Is it experience or is it emotion? Is it something else? And I term a concept, not called Jekyll and Hyde. Jekyll's logical, the scientist, if you know the story of Jekyll and Hyde is the lunatic. Well, Hyde is emotional triggering and emotional states, and we're all subject to them because we're emotional beings. When I get a feeling, I'm not sure where it's coming from. And again, I'm not discounting what anybody else does. I'm only talking about me because I have unconscious competence, which means it's just 45 years of trading. You kind of figure something out. But the other part of it is, why do I feel something? And I'm not going to spend a lot of time on it. By the way, guys, can you confirm this VWAP? And I think I know what the issue is with this, but I'm going to have to fix it. So we open here, RTH open. I get my buyers. I see absorption here. I get my buyers. I see absorption here. This is called VPOC migration. Made a term up. Remember, I don't know. So when I started doing this, this didn't exist. Or if it did, nobody told me about it. So I started creating terms and method. And this is, of course, many years ago. I learned market profile from Peter Stottlemyre. He created it. And that was at CBOT. So I learned bar charting, if you will. We didn't have candles, so bar charts at CME. And market profile was licensed by CBOT, so I learned it there. So that's kind of, that, and a lot of other stuff along the way, not needless to say. So I kind of got into this, and I started observing behavior, and I found that volume and price are really where the rubber meets the road. Indicators are a way of translating. So fine. However, now that I have order flow, I've added another piece to all this, and I've thrown the market profile away because it was time-based, and now I use volume profile. All of the difference is we're seeing the actual volume versus a proxy, which is what the market profile was. It used 30-minute brackets, they call them. And when I learned it, that's what we had. We had no volume. So you didn't have volume, you didn't have a dome, you didn't have an internet, but when I started trading, we didn't have computers. We had terminals. And then PCs, and all that became available. So anyway, market opens, go higher, rotate up, looks like it's going higher, rotate down. Now, and right here, no clue. And this is erroneous, this thing right here. This is the VWAP. It's not in alignment. So just let's forget about the VWAP, I think, for a moment. I think. So this is resistance. This is support. We break below it, going to zero, right? Does anybody know? Nope. Break high, resistance. So right here, I'm looking at this and I'm saying, well, this looks like a short. Sorry, guys. So this looks like it's going to be a short. But what do I have? A breakaway gap. Do I take shorts? No, I don't. I go, what's going on? That's what I do. But I'm conscious of the number one element in all this. It's called context, and it's a trend. What is the trend? Up. New all-time highs. Really? You want to fade this? Up to you. Me? Not so much. Let me check what's going on here. Yeah, some things seem a little out of whack here, so I apologize for that. I'm going to have to work on it again. So here, now remember, this is the opening swing low. Stops are going to be under here. We break high. I take this out. This now is a support area. This is a support area. So I come down. This is my high volume area. I check here. This is where the stops are. And when this is going on, it's a two-sided trade. So I'm in the state of, I don't know. And I'm very happy to tell you the truth. There's no prediction in this business. There's only maybe. So maybe we're going to take this out and get the stops under here. But here's something else I know. Now, I don't know what's going to happen, so let's leave it out because that's not part of trading. Nobody predicts anything. I know as retail traders, we think our job is to predict what it's going to do. And it's not really the right terminology. It's only what it might do and where it might do it. And if something happens, great. And if it doesn't happen, that gives us information. Here's the sellers. Why does the market go up here? Now let's look at order flow. And ignore this. In fact, I should just this is absorption. I see my buyers here. Now, I don't know if we're just going to, because this is now too high, I do not know if we're going to take this out. And remember, I have statistics down here that are possible. You know, it could certainly come back here because there's over about an 80%, a 79% probability we come here. So at this point, I am definitely perplexed and conflicted and just hanging out because I can't sell it. And I want to buy it, but I don't have a location to buy. So I'm just sitting here going, I don't know. And by the way, if you're feeling like I got to get in, that's a psychological event. That's an emotional state. It has nothing to do with business. You want to do business? You wait. You want to gamble? Go for it. So right here, I get my buyer. Now, don't forget, this is the open. So all we did was come down, pick the open, come up, hit resistance, pull back. Right here, I'm looking at it, I'm saying, well, that's too high. We're going to do this. Now, when I say it's going to, I'm saying always it might, never that it will. But that's a high probability, 79% statistic. You have to vet that for yourself. And here's the other thing we do in Trader Lab. And this is what I encourage all of you to do, even if you're not in Trader Lab. And that is narrate the market. And how does that work? It's conditional statements with branch logic. What does that mean? It's like this. If we open here and we keep going, then north. If this, then that. If I rotate down, then what? Then take the stops under this open right here. If I take the stops under the open, so if this, then that, next target, and maybe fill the gap, okay? If not, then what? Now, I don't know it's not here. There's my resistance. If I come here, so if this, then that, resistance. If I don't get over it, then what? Then counter rotation. Is it a short? No. Could it be? Yes. Is it for me? No. Why not? Gap. And a very bullish market, all-time highs. And as Dirty Harry used to say, do you feel lucky? Well, do you? So right here, I'm looking at this and the possibility to take this out, okay? And what happens? I come down here, again, resistance, test. Now, why is this important? Why did we go up here? Because there were buyers here. There's buy icebergs. The 108 sell stops coming out were the guys who bought early and had their stops under that opening swing low. That to me is like they call a giveaway. They're giving the dollars away, maybe. And here it's going here. Come here, still going there. No short. Come here, don't take that out. This is resistance. Here, resistance, still doubtful to me what's going on. I see sellers here. Absorption, come back here, and I'm going, what's going on? Now, I'm in, at the moment, right here, two-sided trade. So right here, what I'm looking at is the possibility of just doing sloshing. I have to break away to get directional. So let's look at this. So this is my resistance. It is there. And this, I thought right here, we're going to take this out. And I see a seller right there. Come back here. This is my support. And this microstructure down here is also support right in here. So I've got support. So, and now I'm coming back across I'm still perplexed, I'm still confused, and I don't have a structured trade. So confusion means not defined. So this is where the stops are going to be under this swing. And I'm still thinking, and I'm posting in TraderLab, stay out of the middle, because this is a rotational two-sided trade. So what's going on in here is you got the late buyers, they got plucked, stops. Then we have rotational. We get our new buyers here, and now we rotate down again. So right here is a selling structure. It's not a short, it's a selling structure. And I'm going to take you into just a microstructure for a moment so you know what I'm talking about. Sellers are here. You see the change in behavior. When's the last time you had a down rotation like that? Over here. What do we got here? Not much. Down rotation. Okay. And absorption. Order flow. Where's the high volume? This is an auction right here. Buyers are here. Sellers are there. Break low. It's a breakout of a micro consolidation. I'm just going to throw this in here to give you some perspective on structure. So as we go along here today, you'll kind of get the idea. And this is what the volume is. So I'm putting the price, I'm bracketing this chop. It's a consolidation. And in volume world, it looks like this. So the volume dries up here, and the volume dries up down here. Now we're only bracketing this. So buyers are there, sellers are there, and these buyers got thrown under the bus. There's the selling icebergs who took the other side. Break low, that's a trigger. Now we come back here to the high volume. If we're going down, this is resistance. And of course, this is resistance. Now let me add a little spice to this. If the sellers were here and I come back, now the high volume's here, so this is resistance. But what happens if I come up here? Is it possible these sellers here will take advantage of this because they were there? Might they sell some more? They're the passive side. You don't see them. The limit order book is what the passive side is. That means limits. They're not aggressors. They're going, if it comes up here, I'll sell it to you. Or I'll sell it. Otherwise, I'm not interested. Passive. Same thing down here. Why didn't we go down here? There were buyers there. We came down here. The buyers go, oh, really? So you got the buyers here, and you got the sellers up here. So I come up here. Now, it's not a short for me. So I'm just going, what's going on? Notice the break. Notice the test. This is structured trade. Now, it's not a short. It's structure. In the Trader Lab, you'll learn this, if you're interested in it, to read the market. I don't use any indicators. What's my quote indicator? My indicator is participant behavior and order flow. Why would I want to, personally, it's just personal, why would I want to use a backwards-looking conflicted indicator? I don't. So, what do I know? Where's my stops? Under here. So what happens here? Let's see. Do we get under here? Do we pick these guys? I don't remember, so you're going to have to help me. So the buyers were here. Remember the absorption. What happens when I come down here? I take 76 sell stops out. It might have been this. Now, what happens here? Let's look. Buyers. Let's look at microstructure. This is my microstructure. You can see it there. Now, I'm still in the clueless zone. I don't know. I'm saying, well, are we going to fall out the bottom? Are we going to come out? What are we going to do? I want to get long, but I'm also very concerned that we can still break down. So I'm still waiting. Me. Others are rocking and rolling in the Trader Lab, having a wonderful time. Now, watch. So I'm crisscrossing here. This is my support. I break high. I'm still below this yellow line, which is my retail price. It moves lower. This is saying to me, this is too high, and I know in the microstructure this is support. I break above it, and I pull back, and it shifts up. Now, this is a very difficult place, for me at least, to trade. Hold on, I'm sorry, guys. I was just looking at my mid VWAP. So this was resistance, remember? Break here, break high. Now let's look. Support now is here. Structure is here. This is accurate, by the way. This is the mid. I believe these are accurate, and the VWAP is right there. You guys confirm that for me? So we got about 87.75, 88. I think I can find that somewhere here. Yeah, 88 and 75. Right. These levels are accurate. What I'm showing in Bookmap is not, and that's a reset that I have to adjust. So it's just pilot error here. It's working okay on my regular trading computer. So this is support. This is support, and now I need to get long. I'm above this, and I'm above resistance. And where'd that come from? Here. Once I get above this, and I pull back, fine. So I don't have a structure here yet, but this is my resistance. That's what created the down rotation. So now I want to get long. Now it's going on 9 in the morning. So I'm sitting here. I haven't done anything. I'm going, oh, well, you know, come on. So I am just waiting. VPOC migration. Now this is potentially a long in the Trader Lab. And the reason is we are moving away from all the structure below us. We have taken this out. So for me, this is the first long I took. And it's at 9:30. And I have a high probability stat right here of taking this out. And I'm in alignment with the trend. So anyway, I get my, I get a scale and all that. And I'm trailing here, but I'm way outside because we have another statistic. Now we're in measured move land at the moment. This is the target. It's called 1.5 IB. When you don't have structure, basically you've got to get into statistical probabilities. The IB is the first hour's high and low. And we have a statistic in the Trader Lab, and you can download statistics if you're interested in them, of 1.5 times the IB. So this is, and 6,000. So these are the targets so far for the day. And that might be it or not. Nobody knows, you know. So, and this is posted, one of our traders posted 6,000. It's kind of interesting. And this is our statistic. So we have 1.5, and then we have 6,000, which is a major strike price. So I didn't do much today. I only basically have one trade on here. There were ads to the trade. This here, let me show you, right here at actually. So this to there, to there. Okay, pull back here. Test if you want. It's an ad here, or if not, when you get VPOC migration, and we had this exact same trade yesterday, I believe, in the stream, I think. You guys might remember we had a combination VPOC migration, IB continuation structured trade. Notice also the absorption coming down here. Very aggressive buying here. This is absorption. So when you come here, you could be looking for a long. And this is, I call the icing on the proverbial trading cake. This is a structured trade in alignment with location. It's called the IB continuation trade. And this is your high volume area right here. That high volume node is resistance. So if you get long, this is resistance. There's your target and 6,000. Let's watch the behavior. VPOC migration. All this is saying higher, higher, and then 6,000 and helmet. Oh, there we are. That's it. So for me, I didn't take a lot of trades here. I just wait. I'm trading 45 years. I don't, FOMO is something that I'm kind of allergic to at this point. So I didn't have, for me, trades that I could take. Now, if I came down here, I would have a location to come all the way back up. But because of this, I could not get aligned well. This was okay. This was also okay. So in here, when we failed to take this out, the low, which I guess was wherever it was, over here or here, it's here. So once we couldn't take this out and we came back and tested it, then really it's game on. But I had to wait. So once we did this, I had to make sure we were outside of balance. Otherwise, it would just rotate. And you can see what we did. We rotated. So that's why I had to wait. I waited. Others, not so much. Doesn't matter what they do. Doesn't matter what I do. So anyway, that was my trade. And that's really the extent of it. That might seem like, gee, I want more action. But for me, I'm more interested in outcomes, not action. Let's see where we are. So this is our target. I have no trade on currently, not a recommendation. And we have FOMC coming up. So not very exciting, but we're not here for excitement. I always think if you want excitement, go to a casino, get the cocktails and the ticket to the buffet. And then that's exciting. I'm not in that business. So that's all I've done today. So just a couple of trades, not much. Certainly no shorts. Short is not in my vocabulary in these conditions. Not saying you can't, and I'm not even going to say I won't. I'm saying is for developing traders, and this is what I focus on, getting traders past the things they do, which take them out of the business. And for developing traders, and this is really a function of how far you've gone in your development, there would be no shorts. But some traders will take shorts. And that's okay if they have a statistical edge. The smart play is alignment with the dominant side. Counter rotations, I think of them like counterattacks. It's like we need some volunteers, hold that line, and thanks, we'll remember you. That's what counter trend trading is in this environment. If you're in a two-sided trade, then it's rotational trading. It's a separate trade plan. When the higher time frame condition is up and you get a breakaway gap and you can't even come down to minimum levels below, other than pick off maybe the opening swing low, which I think we did, then it's north. And now we're up here. So this is very tall. And remember what a blow off top sets up. It is acceleration. It is until the last buyer comes in. And more buyers rush in these conditions. And that is what actually creates a blow off. So we're in that condition. Nobody picks the high. So, and I know our nature is to say or feel emotionally, oh, it's too high. It can't go any higher. And that's when retail traders start fading, because if they're not long, they're going to want to get short. And that's all psychological. It has nothing to do with the business of trading. It's actually what takes traders out of the business. And you need to understand that. You need to understand that you're subject to the same emotions that everybody else is. The difference is, and I always use this little line, and it's important, write this down. Think like a retail trader. Don't act like one. So when you're thinking it can't go any higher and I want to sell it, that might not be a good idea. And one of those times you're going to be right. But how many times are you going to be wrong? And how many times are you going to maybe take yourself out of the business by doing something that's not what a successful, structured trading plan or trader would do who understands this business? Remember why retail traders fail. It's because of those behaviors. When you are impulsed, that's all it is. It's chemicals in your brain. And you lose your mind, literally, just like Jekyll and Hyde. Hyde, Jekyll's gone. Hyde's in control, the lunatic. When you're emotionally stimulated and the juices are flowing, it's chemicals, you are no longer in control. It's like driving drunk. And you got to remember that. It's got to be in your plan. And you got to short circuit that. And that comes from structure and trade plan. Now, 6,000 is a strike, and we know this is our target. In the Trader Lab, you might be done here, and now you're done. Your trade is done. Now, it's possible we go higher, of course. Does it matter? I'm asking you the question. Does it matter if the market goes higher and you're not on it? What are you going to feel? Because this is really what trading really is. It's gaming. What do the casinos feel if they pay a gambler? Do they do anything different? No. Why would we? Now, there's other things we can do. If this is too low, this is now resistance. If I get over resistance, I can go higher. Or I may just check this high and trap these buyers. We don't know the answer. So what do we know? This is too low. This is retail, shopping. This was too high. Microstructure's right there. If I come back here, this is my resistance. So now we're going to see, and it looks like it might make a new high, or at least test this. We'll see what it does. I don't have a trade here in my time frame. I hope that makes sense. Does that make sense? And you guys have questions, please post them if you're in YouTube. Also, please give a thumb up.
Absorption Sellers Volume 131. Absorption Sellers Volume 131.
How we doing in YouTube? Any questions, guys? So this is called the breakaway gap. You're not going to see a lot of them, but you got to understand them. You need to have a full package trade plan for all possibilities. And as you're a developing trader, you've got to isolate different conditions of the market and create a roadmap for them. So in the Trader Lab, you would develop a trade plan, and it'd be basically in a binder. And when you have a gap like this, you'd open up the gaps, and then you'd have specific opening, an opening trade. If it fits, you would have a counter trade. In other words, open gap, fill gap type thing, half gaps. All these things would be laid out. You would know what the structures are for those behaviors. So, and you'd have practiced them and screenshot and circled, arrowed, and replayed them. So your mind would recognize them so you can act quickly. You would then have the sequence of trades that are qualified in certain conditions. You would also have a narrative that would be this narration, if this, then that, so conditional statements, and if something doesn't happen, then what? You know, if it does this, then that. If it doesn't do this, then what? And that takes you down branch logic. Inside of the branch logic are, quote, structured trades that are qualified in the condition as it exists at the moment. When the parameters are met of those structured trades in alignment with the condition, so they're qualified, in other words, the range that's appropriate to get towards the obstacle to get risk neutral, minimum two-lock configuration. Your job, just like the casinos, is to deal the cards, put the game on, if you will, and accept the random outcome. And the reason you can develop the courage to operate in a random, uncertain environment is that you know when you put that specific trade on in those specific conditions that it has a statistical edge. That's what gaming is. That's the business of trading. If you're doing anything in between, you're sitting at the table. Order a cocktail, and in fact, have them bring two, because that's what you're doing. You're gambling. I think gambling is fine. Go to casino. It's a better environment for gambling. If you want to be in the business of trading, it's not the place to gamble. I mean, you can, but then statistically, your outcome is not going to be very good, most likely. And I know we all think we're different. We're going to be the exception. I can assure you everyone else has done the same thing, has thought the same thing, and they're no longer in the business. So you might want to learn not only from their outcomes, but maybe from your own experience. The best teacher is yourself. The psychology of this business disregards experience and lives in the moment. The last trade, the last rotation, and all logic goes out the window because of the chemicals and the dopamine fix. It's really important that you learn about not only your conscious mind, but what's going on under the hood. What influences us to do things that are not in our best interest? What overwhelms us to do things? If you took along here, what was the problem? This is resistance. And what about this thing? Resistance. Where's the volume? It's right there. Where's our target? Well, 6,000 is a strike price. And now if we blow through 6,000, then there's another target up here, by the way. Not to make trouble. But let me see if I can find it. It's not a high probability either. Let me see if I can. Wow, it's only about 20%. So I believe it's 97. What is it, guys? 607, something like that? 605, 2 times IB high, or 2 times IB. Where would that put us? Could somebody do the math real quick? Somebody in Trader Lab, would you guys do the math on that? In case you're visiting on YouTube, this is Trader Lab. 2 times IB is 60.05. Well, 1.5 is 98. So would it be higher or no? Well, Ed, that's not the IB. It's the RTH IB. $60.04, $60.05. IB is 14. So that's 28, 29 points above here. So what does that do for us? 29. And what's 29 added to IB high? So almost 30 points. So we're talking roughly 60-20-ish, something like that. Is that right? Okay, 60-20. Thank you. Well, I'm not holding my breath 60-20, but that doesn't matter, does it? Nope. So this is a possible target, and again, I don't think a lot about this stuff. So this is possibly an upside target. Also, this 6,000 is our target. So we have 2 targets here. We break 6,000, maybe that. There's nothing up here. Normally, when you're trading the auction, you're trading levels. Well, we're, new all-time high. So this trade here does not, for me, there's nothing really to do here. So as I mentioned, for me, there's nothing to do. If I got long here, where am I going? This is resistance right here. And the other thing that tips you off is you had the sellers here, the absorption right there. So if I come back, what do I see here? Absorption. What is that telling me? I got my sellers are still active here. and the potential for the counter rotation is rather high. Are you guys tracking? Making some sense? Footprint. Alexander, I do have a footprint. I think it's lagging and not very useful. I have it. I mean, it's for me, it's kind of interesting. I do have footprint. I do look at it. It's not material to my trading. If I didn't have it, I wouldn't do anything differently. In fact, this is much more timely because it's in real time. A footprint is going to show me, oh, yeah, I got absorption there. Well, I can see that right here. I got absorption. It's going to give me the numbers of contracts on both sides, okay? I'm going to see numerically what I'm seeing here. So when I look at this and I look at my footprint, this, if I'm waiting on the footprint, you got to kind of wait for it's in bars, whether it's a range bar or something, or a time-based bar like 1 minute or 30 seconds, whatever it is, you're waiting. I don't want to wait for anything. So I find it interesting, and I look at it and it shows me the numbers of what happened right here. But I don't need to know. I can see what happened right here, right now, right there. It's too high. So I'm seeing that here. And if I look over at my footprint right now, what's it going to do? I don't know. So I have to wait with the footprint because what it's doing, it's showing me the delta basically. It's showing me the change in delta, and when it's filling in, this delta is oscillating between buyers and sellers. And then what you're looking for is when we come up here in the delta, am I seeing absorption up here or am I seeing exhaustion? And I have to wait for it to give me for a new bar. Otherwise, if I have Bookmap, I'm not waiting on that. I can look right there in the microstructure. I'm going to just show it to you. And this is not a short, but what would it tell me? Absorption, buyers, a delta, which I would see in the footprint, but it would give me a number. And then I'm waiting to see what happens because there were sellers here, absorption here, same thing I'd see in the footprint, and I come up here, what's going on here? Resistance is there. My footprint doesn't see this the same way because I have to wait. So I find the footprint is like walking through mud. It slows you down. I don't want that because the way I find what I like, and it's just personally, I like to execute my trades with a scalpel because the better my execution is, and this is what Bookmap helps me with, I can get in with less risk. This is my micro structure. And this is not a short for me, right? Because the trend's up. But let's assume I was managing a trade. I might determine right here, I want to get out because of what happened here. If I'm waiting on the footprint, I'm just answering a question about footprint. I'm not saying anybody should or shouldn't use them. I'm just telling you what I do. I already know what happened here. I know this was absorption because we didn't go up. I got the icebergs here. I can see them. I have to assume that when I look at the footprint because of absorption. I have absorption detector. I see the stops here, and I see my buy icebergs here, and I see a buy iceberg here. If I get below these icebergs and I can't regain above here, then I'm going to probably come down here. It's not a short. You see? Does that answer your question? Hope it does. Ignacio, come to the Bookmap Discord Trader Lab community. There's a library of webinars that discusses what I'm doing in real time. Also, there's a primer webinar. If you want to kind of get the high-level overview of what this is, it's all available. There's a library of webinars. There's 60 PDFs of structured trades, which I show at the beginning of the stream, that you can download. But the real thing about this is the concept. of what the market is. The market is not indicator driven. It is really the behavior of the participants. And then our indicators are kind of like the back end of translator. It's a translator. And we tend to use multiple time frames, multiple indicators, whatever, to create predictability. And I want to use the word predictability because traders think, well, they're going to predict what's going to happen next. And it's not just semantic. It's a psychological state of mind, thinking that you can predict anything in an absolute random environment. Not you, but I mean all of us collectively. We have to reframe not only our experience in the trading environment, but even understanding what it really is. It's not what we think it is. We think it's predicting where the market's going to go. I have no idea where the market's going to go. And the reason I say that to you, I can suspect, and I have trades that tell me what to do because they have an edge. But just like the casinos, I can't predict the outcome of the next hand. Well, how can we predict the outcome of anything? We can't. So if we accept that we can't, we have to mentally put ourselves in a place of statistics to create an edge. So when a trade shows up, whatever it is, whenever it is, and it's in alignment with our trade plan, just like the casinos, their game plan, you've heard the term game plan is to play blackjack exactly the same way. So my game plan and plans in the Trader Lab is to play it exactly the same way, based on where these edges show up, or probabilities of one thing happening over the other, not the prediction of what's going to happen. It's the probability of what might happen. So we're always operating in maybe, we're always operating in a random environment. We're not predicting anything. We are using statistics. That's part of the probability package, if you will. And we do know. What do we know? This is too high. What does that do for me as a trader? What it does for me is tell me to get out if I'm long. This is not a trade recommendation because this is time frame or fractal dependent. My fractal, once I see this and I see this right here, I could be out of the trade here. Or I come back here. If I can't get above here, I can be out of the trade here. Am I going to go short? Not me. Could it be a short? Yes. Is this the target? Yes. What is the context? Up. You see? So in my trade plan, not yours or any, I mean yours, the collective view, I'm talking to everybody. You might be a scalper and you might say, well, that's a short and this is the mean. So in multiple time frames or fractals, you're going to sell this or this to here. Your stop is here. I can't sell anything because of the context. So I don't do that. What I would do is exit, or I'm managing from a much lower location. You know, in other words, I'm way out here someplace and I'm going to live through a rotation and maybe give this back. How do we determine what to do? Well, that's what the trade plan is. Some traders trade this kind of thing. Me? No. Other traders are going to be out here because they can't pick the high of the day just like anybody else. Or you're done with your trade here and you're done. You know, that's it. You put the car back in the garage and you forget about it, unless it comes to another location that has an edge. Is there an edge here? To me, in an uptrend, there's no edge getting short, in a breakaway gap especially, because that's showing you there's aggressive demand. And why would I sell this? Unless it's just trade management to exit, you see. So subject to my time frame and trade plan, this is an exit, but it's not a short, you see. In different configurations, this would be a short, back to here, and then maybe back to here, but not today, you see. So how do you differentiate that? That's what Trader Lab is. This is why Trader Lab exists, to help traders understand market mechanics. How does the market work? Why does it do what it does? And how might, at times, you get in alignment with it? And the other part is the business. Build a business. How do you build a business? Well, you got to get educated. And I can tell you, this is not hang out for a month or two and now you have an ATM in the basement. This is advanced in the sense of this is the real deal when it comes to trading, not Fantasy Island and not the only one indicator you need and all that jazz. That's not real. And it's proven by the failure rate of all these other retail traders who do chat hopping and all this kind of stuff. And if you're curious, if any of you out there are visiting in YouTube, if you're curious about TraderLab, what makes it different, I invite you to use the link in the bottom of YouTube and visit TraderLab. There's no cost. This is TraderLab. You can see there's a lot going on here. I'll get you a question about FOMC. I think what you're going to potentially see is even squaring up ahead of it, some long liquidation. That would be reasonable. You can see what this is TraderLab. Just I'd like to give you a quick sweep through here, and there's a lot going on here. I start in the morning. I post in here during the day, little reminders, and give an overview, scenarios. So this morning, and I'm going to see if I can find it. Huh. That's Slaughterozzi, one of our guys. SPX 6,000. Now, he posted this at 9 in the morning. Notice where we are, 6,000. I think he has one of those magic 8 balls, and he got it back from the factory, and it actually answers sometimes. Anyway, it's so early this morning when I do this. So manage yourself, adjust the context, manage FOMO, market mechanics. That's really what you got to do. And then the scenarios. We are talking about a blow off. We're also talking about irrational exuberance and not to pick the top. Slaughterozzi, nice post on the 6,000. And remember the thing about 6,000, guys, 6,000 is a strike. So there's, a lot of potential for 6,000. Now we're coming down, and you had a stop sweep up here. You have your icebergs. Now you might get here. How are we doing in YouTube? You guys have any questions? Hey, Louie, good morning. Alexander, I hope I answered your question on the footprint. How important it is to me, it's not important to me. But I always find it interesting just to add some numbers to the behavior. So if I look at the footprint, and I can't drag it over because I don't have it on this computer that I stream off of. But what I had in the footprint was really an excess buying excess and an imbalance in the order flow, which I can see in the footprint. Let's come in here and look at this. So I have a sweep. I have buy stops coming out. 6,000 was the outside target. Buyers, buyers, buyers. What happens here? Nothing here. Nothing here. Now, this is micro structure, and they're not actionable. But this is the micro structure. So this is micro structure. That is micro. Now, this is what Bookmap can do. We're in, nanosecond. You can go down to nanoseconds with this, which is a little rough. So, but you can go into any micro structure you want. So right here is high volume. Now, what that means is it's an auction. Now, I'm going to take you down where no person should go. This is like, let's bring the scalpel and the electron microscope out, because that's exactly what this is. But when you have an order flow tool, And these are not actionable. This is informational. That means I'm going to glean something from this behavior. Let's see if we can glean something from this. Remember, I showed you this before. So, too high, too low, retail. High volume is retail. Think shopping. If the buyers refuse to pay the retail price, they will leave the store. It's a shopping experience. Now, let me pull a little more volume in here. And what you're going to see is, so this is micro. I can't do anything with this, but I know this is too high. So then where was my next level of support? It's here. So now, don't forget, we hit 6,000. That's our outside target. So where is resistance? It's there, and now it's here. So let's watch it. And these are not trade recommendations. For me, I just sit back. I have nothing to do. I don't try to pick the high of the day. It's just something that I've figured out that just isn't worth the brain damage. This is resistance. We got an iceberg hanging out here, and this is the retail price. In other words, the highest volume so far for the day is here. So if we're thinking multiple time frames, and I don't think the clock is not part of this, but let's just call it what it is, fractals or time frames. The clock is the time. The behavior is the fractal. The fractal is not clock-based, it's behavioral. So if this was support, I should say resistance, this, and I break above it, and I come back under it, this becomes resistance. This is the mean. So the possibility is to come here, out here, somewhere, and then come back here and come back here, or not get there and just come here. So this is kind of where we're looking for it to come. It's not a trade recommendation. Market is bullish. So again, nothing for me to do. But I do know this was too high. And I do know I got my primary target, which was there. And I think we said 07 or wherever it is, and then 6, and then FOMC. So you could kind of logically put it together that FOMC, you're going to get some squaring up. You guys have questions? Still seeing little selling right here now, so let's just keep an eye on things. So you got your buyer. So I'm seeing some absorption in here. So we want to see what's going to happen with these buyers right here. The iceberg canceled. There was absorption here because the buyers ran out of juice and the sellers took over. So that's setting, this is why this is a material area. Let's just observe what it does right here. So I'm using order flow, structure. I know what happened here. It can do anything. The market is bullish, so I don't go short, just not my trade. And others can do whatever they want as long as, and I encourage them not to gamble, but to only trade where they have an edge. Structurally, the potential is to come here. It's 4 points. How much risk do you have to take for 4 points? For me, doesn't pay, no interest. Let's watch. And if you have questions, please post them. I mean, you've got the NQ is up almost like 1.3%. Do you feel lucky, as Dirty Harry used to say or did say? Because that's what it is. And it might be the high of the day. Zoltan, hi. Which colors or symbols represent buyers and sellers? Well, the delta, which is the aggressor, so the red is the aggressive sellers, the green is the aggressive buyers. But what's important in order flow, when you have an aggressor, which means market orders, okay, delta, so these are delta. When you have an aggressor, it's made up of stops, which become market orders, and initiators. So, profit taking and sell stops. Now, if we go up from there, and we only know this when we see this behavior, then we know this was absorbed. So the buyers are here, but we can't see them, the limit order book. Now the buyers are in control here. But where were the sellers? They were up here. So I got my sellers there, and I got my buyers, wherever they were, over here. So this was, remember, this was resistance. This is still resistance. This is support. This is support. So there's nothing here. I'm just showing you how you read it. Now, remember, if I come under here, then I got this. These are all the same structures in different ways to look at it. Up here, when we broke out of here, this is too high. This white line's the same as this yellow line. Now, before you storm out of here, we're talking different time frames or fractals. So this is the highest volume so far for the day. Consider it a retail price. And in the store, when you go shopping, if the price gets too high, less will pay it. And then the potential is if the sellers want to sell or attract the buyers, they got to lower the price somewhere to try to find those buyers. And this is the retail price. So potentially we could come here. Or if this is too high, just pull back. And if there's aggressors in here, we might not get here. We'll find our buyers and come back here. But let's talk about the structure here. If this is too high and we leave it, it creates the counter rotation. If this is too low and we come back to it, we might only check it and go up and come back here. So when you break from here, the possibility is to come here. It's called mean reversion. If we come up, we can come back here. And if it's too high, we'll leave it again. That's called mean reversion. So returning to, this is a mean up here of this auction. This is a mean down here for the whole day, for the full auction. So this is what's confusing, of course, because you're saying, well, how can it be both? It's time frame or fractal specific. So let's watch what it does. Now, the fact I'm reading the market doesn't mean I trade the market. It means I stay in alignment with the market. It means this is the retail price. My buyers are aggressors here. I pulled outside. This was too high, remember? That was too high. That is too high. And I break above. I find too high at a higher level. I come down. Now I'm back here. Is this now too high? Or am I just going to keep the march going? I can't answer that. It's called uncertainty and randomness. So what I can do, the only thing I can do in trading, besides understanding the direction of the market, is read the footprints of the participants and what they think about the price. Because these guys weren't willing to pay more than this. And now we're under here, so this is resistance. It looks like I'm taking it out, and this is support. That's what I know. I don't have a trade, though. So I don't have anything to do. So that's just what it is, Hope you're getting something out of that. Some days we're very active and other days there's really not much to do. How are we doing in YouTube? Zoltan, did I answer that for you? Twink is asking, is the FOMC sell the news event? I don't know. Put it this way, I think you're going to get potential profit taking, but that doesn't mean anything. What I think is really not material doesn't have to do anything. I mean, I don't think that the dominant piece in all this is the FOMC. I think the dominant piece is the election result. So we might get anything can happen. So I'm not one to predict anything because I can't. But the behavior of the market does not seem too concerned about the FOMC. Now, we might again get profit taking, and that we don't know the depth of the profit taking, or we get a big volatility spike take out longs if we actually do get down to the low, which no idea. And then that might be a buying opportunity for continuation. It's not a recommendation. But as far as I can see, there's no reason not to be on the long side. And there's no reason to get short. So that's all I know. And you can see why, right? What's the context? Up. And I have to suggest again, if you, as retail traders, if you're thinking I want to short it, I'm going to ask you why. So what I have found for me is I'm not here for action. I'm only here to engage when I have a statistical edge, not to make it up, not to get bored. Oh, I'm looking for something to do. What's this? Oh, this must be too high. I'm going to get short. It's going to come here. Well, in this context, it never has to come here. This can keep marching up as opposed to the market coming down. Because what has it done? Marched up, up, up. It might come up. If we build volume and rotate, it'll come up. Or the market runs away from it, right? Where's our next target up here someplace? I forgot already. Up in here. 10, 20. Nobody knows, so it doesn't matter. But if you're fading this, you need to go back to school because you don't understand trading. You're responding to FOMO. Here's one of the things I found that, this is normal behavior. Let's say you didn't get long or you got stopped out and then you didn't get back in. Now the market's doing this and you're having all kinds of regret. Now, what are you going to do? Well, I can't get long now. It's too high. You're going to start fading it. Has anybody here done that or doing it? How about in YouTube? I don't use another tick chart. Alexander, I do use other charts because this is kind of my microstructure. I call this the tip of the spear. I have other charts. I use a daily chart. I use a Renko chart just to see the broad stroke of the trend. And then I have, not much else really. I do have a footprint, but I don't trade off it. I just look at it. To me, it's more impediment than an asset because it's delayed. But I find with the footprint that after I see behavior, there's things in the footprint chart you don't necessarily see. You can't see in Bookmap because it'd be too noisy. So that's why I have a footprint on a separate chart because I want to keep this really micro. And to see what's on the footprint chart, I'd have to really open this up. And Bookmap has a footprint, by the way. But again, then it would be too noisy for what I use Bookmap for. So I just have it on another chart. And it's not timely. If I get behavior here, I'll see the same behavior in the footprint, but it has numbers attached. That's the only difference. And a couple other pieces, something called a single and another thing called imbalance. But when I see this, I know what this is right here. That was absorption or exhaustion. Buyers are here. Passive sellers are here. Micro high volume is here. If I break below here, test this, and I don't get over it, I'm going to rotate. That's what I know. If I look at my footprint, I'm seeing I'm in the past now, and it's pretty timely. I'm seeing potentially absorption up at the high, and now I have to watch the footprint for the sellers. I'm seeing the same thing here, and I can't show you the footprint, but I'm not seeing anything unique in the footprint that I can't see here. In fact, what I'm seeing here. See what I'm saying? The selling. So I'm seeing that in the footprint, but I already saw it here. Does that make sense, guys? I hope that, not that I want to spend time on footprint because you don't need the footprint in my experience. In fact, the footprint is actually an impediment for me. Are you guys tracking? Yeah. Hi, Jerry. For the ES, you know, I play with it. The thing that's a problem with the footprint, the more you go down in more sensitivity, the more noise. It's everything is the same in this business. Because we could be looking at like this rotation here, and that's all you get. Well, you know, I can read it, but that's not a reason for me to get short. I would say 30-second footprint or a range, you know. So 30-second footprint range or a range chart. I use sometimes 8-tick ES range is a shorter one, and then I use higher ones if I want to see like a. Trying to think what I'm using here. 30 seconds. Or 12-tick, 16-tick on the ES on the footprint. But again, I don't need it for trading. I just happen to have it. You know, it's one of those things that I look at. You know, I look at it, but if I've traded for years without it. So I mean, many years. And I looked at it years ago and I threw it away. You know, it's one of those things. But I throw it up here because what I'm doing is I'm using footprint and Bookmap. And the only reason is because I understand footprint. But it's, to me, it's lagging. And the last thing I want is lag. When I look at Bookmap, why are there green bubbles here and the market went down? The answer is absorption. So with the footprint, I'm going to have to wait, and then I'm going to have numbers, and I got to have a bar close or something, or a range, but however it's set up, right? With Bookmap right here, I already know what this is. Right here. As soon as I saw that, there's resistance. That's my trigger. That's my retracement. And that sets up a counter trend short that I would not take. See? So I can see that with the footprint, but I'm way behind. 60, let me just look where my resistance is. 60.01 on the footprint. So this is kind of where, and that's high volume here and here. So this is still, I'm seeing the same thing in the footprint. But I saw this right here. The footprint is just so much slower. I mean, and it's pretty fast. You got to understand, 30 seconds is fast, but this is nanoseconds. So this tool, to me, is light years ahead of the footprint. Now, I can look at the footprint, and I can see other things in it, but all they're doing is showing me the same thing in a bit different way. You know, in other words, it's represented a little bit differently. This is resistance now. In this structure, right in here. It's not anything more than what's happening right here. Now, why didn't we not go down? Buyers are here. Buyers are there. Right now, buyers are here. Sellers are there. So in a microstructure, this is a short, which it's not. I want to emphasize, it's not a short. I'm reading the behavior. The context is up. So what is the condition of the market? Going up. Am I going to take a short? No. Can I read the rotation? Yes. So if you're in TraderLab, your job is to continually narrate the market. The reason is to develop unconscious competence. In this context, there is no short. But if we're in a different context, you'd be using this for short triggers. But it's not an alignment, so there's no shorts, you see. But we do know the sellers absorb these buyers. So resistance is right here. So we're going to watch it together, okay? So let's watch the behavior. And again, it's not a short. I keep saying that because I don't want you to think I would take a short here. I wouldn't think of it. I would think of observing the behavior, narrating it, and anticipating it because of what the participants are telling me. If I don't use an indicator, what is the indication? The behavior. And Bookmap lets me read it. It's a language. So that's what TraderLab is. You can use indicators. It's not the point. But most traders focus on indicators, not understanding where it's appropriate and where it's not. Can you use an indicator here? Maybe. Would I? I don't use them. And they're done that. Why is the market going down here? What does your indicator say about that? Well, we know why the market might stop here, don't we? Does that make sense, guys? I hope you're getting something out of this. This is the Trader Lab. And if you're interested in Trader Lab, just reading here. Gary, did I answer a question on footprint? Okay. This is a Trader Lab, and you're all welcome to Trader Lab. There's a link in the bottom of YouTube. If you're interested in visiting the Bookmap Discord Trader Lab community, there's no cost. It is a serious community of like-minded traders. It's about building out the business of trading, trade plans, statistical probabilities, and dealing with the psychological impediments that we all face as mere humans. Our humanity is potentially our greatest obstacle, assuming you do the work. Then remember how casinos operate. They are not attached to the outcome of any individual trade. We are completely attached to it emotionally and otherwise. They pay the gamblers. It's called overhead and cost of production. The business of trading has expenses just like casinos do. Yet they only play games that have a vetted statistical edge. They don't change the games. They don't make them up. They don't skip the next hand. If the gamblers get paid, they don't do what we do. Why are they successful and most of us aren't? Because we have no self-control. We are controlled by our emotional states, which is chemically induced. Your intention cannot supersede your wiring. Fight and flight. The revenge trading, the FOMO. If you miss the longs, you're looking for shorts. If that's you, you got to put a stake in the ground and say, I'm not going to do that. You're going to take yourself out of the business. For the one time you do get right, there'll be 20 times you're wrong and you're gone. You got to learn not only about yourself, but why other traders fail in this business. Think like a retail trader. Don't act like one. Please give a thumb up if you're visiting on YouTube. I'm going to show you again what the 60 PDFs of structured trades look like. If you're interested, they're available to everyone at no cost. I did these. I'm not a vendor, but I had a lot of traders asking me, what are you doing? And when I'm not asking myself what I'm doing structured trades that have an edge. And I put these together to help traders. This was done in 1920. This is post-COVID Trump. Isn't that interesting? He's back again, and here we go. So, and this is, 2020, 2020s. So I wasn't streaming then. Bookmap asked me to stream, and I agreed to do it. Otherwise, I'm a full-time trader when I'm not doing this. And of course, I support the Trader Lab community. That's what I do. And I'm pleased to do it. Which when I started trading, somebody did it for me. FOMC's coming up. Please mind your risk. If you're in YouTube, these streams are available exclusively to Bookmap Discord Trader Lab participants. You can click the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. Take advantage of all the resources, the community, the statistics, the library of webinars, and of course those 60 PDFs. And I will see you guys in the Trader Lab. And if you're interested in continuing the conversation, use the link in the bottom of YouTube. There's no cost to become part of the Bookmap Discord Trader Lab community and take advantage of all the additional education, stocks, options, crypto, order flow, market maker behavior, algorithmic behavior, and of course, education on how to use a high-tier order flow tool like Bookmap. Thanks again, guys. Thanks for visiting Trader Lab. And keep an eye on the market, FOMC, and who knows after there. And if you don't have a vetted, statistically based edge in a trade plan, visit the Trader Lab. It might make a big difference to your outcome as far as building a career in the business. And of course, past performances can never be indicative of your personal and individual results. Thanks.